Welcome back to the Fixed Ops Roundtable. I'm Sarah Vantine here with Ted Ings. Today, Ted, we have an exciting panel with Paul Elliott, Risk Management Specialist at Insurance Office of America. And Ted, lots of incredible information we're going to find out today.
Sarah, you're right. A lot ahead with Paul Elliott, Insurance Office of America. Paul, welcome back to the Fixed Ops Roundtable.
Glad to be here. Thank you, Ted. Thank you, Sarah. Just so happy to be a part of this community and appreciate all that you and your team, all that you do for the industry is fantastic. And glad to be here.
Thank you.
Well, Paul, I know we are going to be talking today specifically about error and omissions, which is a very sensitive subject, Ted, for our dealers today. I know recently, Paul, the FTC has issued some warnings and some fines to the dealerships, some dealerships across the United States. And Paul, a lot of attention is being paid right now on some of these important areas.
Absolutely, it is. It's an interesting time in the business, especially when you mention the letters FTC. That gets everyone's attention really quick. And considering 97 letters went out, warning letters, everybody I think is on notice that if we need to button everything up and make sure we're doing things the right way to avoid any potential. I don't know if you would want to call it loss or damages, whatever you might want to call it, but you better button your advertising up, or you're because you're already on their radar.
Well, Paul, to also kick things off with some scenarios that we're going to run by you today. But before we get into those, we want to just set the stage because, for our dealer audience that may not be aware what an AEO claim is and talking about errors and exposure, could you just share with us briefly, what does that mean and why is it important for dealerships?
So, ANO stands for Agents, Errors, and Omissions, and this is what you might find in a garage policy. You might find your truth in lending, truth in leasing, statutory vehicle disclosure errors, title errors and omissions, things of that nature. And you'll find that in your policy. You have coverage for that. But that's where these type of claims or these type of scenarios happen.
It's incredible stuff, Ted. And Ted, I think we have some exciting pieces that we're going to unpack today. If I can go first,
Yes.
Paul, I know that we've prepared and we've found out that there's very real scenarios that have happened to dealerships, and these are a little bit of a warning, warning stories on how they happen and where we can have some resolution and some solutions. So first, I would love to give you a scenario that really happened,
Okay.
and then have you talk to us about what tips that you have, to prevent these scenarios from happening.
All right. All right.
Okay. Well, first, truth in lending. So for this particular one, Paul, a finance manager disclosed an incorrect APR on a retail installment contract. And the bank identified the discrepancy, and the customer ended up filing suit, alleging that there was a violation in the Truth in Lending Act for failure to provide accurate credit cost disclosures. So what does that exact situation mean, and what tips do you have for avoiding it?
So, obviously don't want to get too in the weeds, but more than likely in this particular case, maybe the credit was better than was presented to the bank or the lender. And as a result, that increased the cost to the customer over the life of the loan. So one of the things you would want to do, and dealers are really good at this, but you should require secondary review of all finance disclosures prior to contract execution. That's one of the first things. But it's always great to have two sets of eyes. You see and hear things different than I do, and it's really good to make that part of your practice. You need to use system generated calculations rather than manual APR inputs. I don't know what AI means yet. We're all still learning AI, but I'm sure AI will be a part of these prevention tips as well at some point. You want to provide recurring truth in lending training for your F&I personnel. I mean, training and compliance training, it just has to be consistent. It has to be a discipline, just something you continue to do all the time. And then you need to maintain, final executed disclosures in every deal jacket. They got to be there.
It makes a lot of sense. Paul, another scenario that I want to discuss with you and Sarah is odometer disclosure. Before we do, there's been some news on the Fixed Ops Roundtable that even though we have electronic odometers today in the industry, there are still odometers with fraudulent information out there and tools available to people on the web who can actually alter those odometers. And there's been an uptick seriously in our industry of dealers seeing that. But for the discussion we're having today, this was a disclosure of a vehicle sold with an odometer that was completed incorrectly because somebody transposed the digits and they understated the mileage. Like it could be easy to happen. And the customer alleged that there was statutory odometer violations and sought damages for diminished value of the vehicle.
You think about that, Ted, and I don't know. Let's say, in this particular case, there were 12. I don't know, 27,000 miles, and it ended up going 72. Or actually, there were 72,000 miles, and it's shown as 27,000 miles, right? So yeah, look at me. I'm just butchering the numbers there, but you get the drift. 72,000 versus 27. And that's a much different car. Uh, Big difference between 27 and 72 for a car. And as a result, that's going to be a problem for the dealer. And it's just a simple error. So some of the things that you want to do is you want to require verification of odometer entries against vehicle dashboard readings. So when you're writing it down, instead of doing it at a desk, let's do it at the odometer. Right? I mean, just it's hard. It takes time, but in the long run, it's going to save you money. Again, said it in the first scenario. Implement a second check process. Two sets of eyes, always better than one. You want to standardize your odometer disclosure completion across all locations. You got it, all departments or everyone that's in the organization. Make sure it's standardized. Everybody does the same process every time. And then retain signed odometer documentation with each and every deal file.
Paul,
And
these
I want to add
scenarios
one
are
thing.
real.
I was in a dealership one time. There were twin brothers that were dealers. We were out in an older part of the dealership, and he actually showed me an old. I mean, he was like fourth generation dealer, but he showed me an old odometer rollback device. So I don't know if I should say that, but I was like, wow. I mean, I've never seen one of those before, and I haven't seen one since.
Yeah, well, I understand there's some newer variations of that are out there. So
The thieves are always working. Okay.
yeah, yep.
Sorry.
No, but it's more
Maybe
important
thief
than
is
ever.
a strong word, but there are people that are deceptive
Yeah, and
intentionally.
dealers have to be vigilant and managers have to be vigilant, not just
Correct.
on the sales side, on the fixed ops side, because the first person to look at that car might be the technician, might be the advisor. In days past, we on a used vehicle, new vehicle, of course, very few miles, but we had to go out and look at the car. We had to actually get the odometer mileage on there, and that still holds true today.
Well, and Ted, on the odometer track, and talking about technicians in the service department, today more often than in previous years, we're seeing more vehicle acquisitions happening on the service drive. We're seeing a lot more used cars being purchased, for dealerships, and a lot of potential scenarios where there could be some problems with that used vehicle purchase and some incorrect information. So, Paul, for this next scenario, prior damage disclosure, that can be a very sensitive subject when it comes to used vehicles. So, in this specific example, a vehicle had prior rear end collision damage that was fully repaired, but it was not disclosed at the point of sale. And the dealership failed to obtain a signed customer acknowledgement of that damage. And so the customer later discovered the damage and then sued for financial loss and diminished value as a result.
That's right. So once again, just some prevention tips here. We have to establish written standards defining, what constitutes disclosable damage. Not everything has to be disclosed, but you need to know what has to be, or you're going to find yourself in this situation.
Okay.
Require signed customer acknowledgments for all prior damage disclosure. That's key. You need to make the customer sign the document. Apply disclosure standards consistently, regardless of repair quality, and then maintain vehicle history reports within each deal jacket. So a lot of places to get that information these days. Print it out, make it a part of the deal.
And Paul, I'm thinking now with the addition of ADAS technology in pretty much every vehicle over the last 10 years now, when a vehicle is repaired, they have to be calibrating these things, the mirrors, the lights, all these new requirements. And a lot of that damage, if it's not disclosed, could come up later, okay, in in an ADAS that's not calibrated correctly, and dealers could leave themselves open, for liability on that.
100%. And what I can tell you is when we see these claims in our office and our team, those people that have the information documented, it goes away.
Hmm.
If you don't have the documentation, you don't have the information, then that leads to more questions and generally leads to a bigger check.
That written process, Sarah, that Paul's referring to, has got to be, it's going to have to be built into the recon process if it's not already, and have that established, and being able to verify and point to that yes, we do have that. So important.
It is, Ted, and Paul, this, all of these components just, again, there's a lot of potential errors. There's a lot of potential opportunities for there to be
Hmm.
omissions, either accidentally or because a process wasn't executed correctly.
It's good habits, bad habits. This has to be a habit, and it has to be something that you just do over and over and over and over. And what I would say on just for example on prior damage disclosure, the dealers that we work with that we don't see these claims on have a 27-point inspection, 37, whatever it may be, but there's a process, and it is the same for each and every unit that leaves the dealership.
So important, Paul. And our last scenario today that we want to run by you. So this has to do with agents' error and omissions. And there are third party insurance agents that are employed by the dealership that do write a lot of policies for the store. And so in this particular one, a licensed insurance agent that was employed by the dealership failed to bind physical damage coverage purchased by the customer. And what that meant later was that the vehicle ended up sustaining some hail damage, and surprise, the policy didn't cover it, and so the customer sued the dealership for failure to procure coverage.
So, obviously, this is something. I mean, you think about the number of transactions maybe in an insurance firm or an insurance agency for personal lines insurance. Well,
Sure.
basically, that's the way this particular agent is acting for the dealership in this case, and they're placing the insurance for the customer at point of sale. So the customer was fine if they ran over someone or made contact with someone, and they were liable for that, but they had no coverage for that damage to their vehicle. And in this case, they did not have coverage as a result of the hail damage. So there's processes that certainly our team can help you put into place if this is something you need help with, to confirm that insurance binding is in writing prior to the vehicle delivery, to make sure that coverage is there and it doesn't leave the dealership without it. We limit transactions to properly licensed personnel. We don't have the only hand in the cookie jar is the licensed insurance agent, and
License.
that's the way it should be. Otherwise, you're I don't want to say you're breaking the law, but you're putting yourself in peril. You need to retain proof of binding and issue policy. So one thing I will say, if you're in the insurance business, just because you bind coverage doesn't mean the policy actually comes back with coverage. So you need to check the application against the actual issue policy. Again, a second set of eyes.
And actually look at it. Yes. Yeah.
Correct. I mean, people. We're human. We make errors. Okay, that doesn't mean that an underwriter, an insurance company, can't leave off of coverage. Not intentionally, but it can happen. So you just want to make sure whatever you applied for is what the insurance carrier issued. And we have those processes here at our firm. We work with someone. We tell the underwriter what we need. We issue a proposal. We bind that proposal, and then we have somebody take a second look to see if anything's missed, and we address it. And then you want to clearly differentiate insurance products from non-insurance offerings. So you just want to make sure this is an insurance product, this is not.
Paul, you work with dealers specifically. You're part of that dealer practice group at
Correct.
IOA. And I mean, you have seen a lot. I mean, I imagine in our careers, we all see a lot, but you see more than others. Okay. You work with dealers. You're a trusted advisor to dealers. Tell us more about the work that you do at IOA and
So
how you help dealers.
happy to, Ted. We're very proud of our practice here. We have a practice group, so we have a team of people that support me and support others all across our 70 plus locations around the country. We're now part of Navicord is part of us up in Canada. They're the second largest broker. We currently in the U.S. place a little over 35 million in premium for franchised and independent dealerships. That could be work comp, that could be garage liability, may even be employee benefits as well. But I think we serve right now over 350 dealers, and we're really good at it. And I say that with a lot of confidence. We're good in this space. We've got, great competition. There's competition in everything, but we feel like we're better because of our process. And we try. One thing I like to say is nobody likes talking to 4 or 5 insurance agents. I mean, I get it. I don't. If I'm shopping my personal home insurance, I don't want to deal with 5 people like me. So what I would tell you is we try to make the experience one that is consultative. Okay, like this is not a situation like we want you to view us more like your banker, your attorney, um, you know, people that you trust. I mean, because there's a lot at risk. There's a lot going on. There are a lot of moving parts in an auto dealership. 5 different businesses, 6 different businesses sometimes.
Yes.
And you need to do more than bid your insurance. If you're bidding your insurance, you're stuck in the 70s. Okay, that's what you did in the 70s. This is a different game. There's too much at risk, and I think we have a proven process to make sure you're protected, to protect your balance sheet, to protect your checkbook.
Well, Paul, it's more important than ever to have great best practices in place to prevent loss. And again, thank you so much for sharing these incredible scenarios with us and some best practices for our dealer audience to avoid some of these potential scenarios from happening. For our audience, if they have more questions, if they're curious about specific scenarios that they may have or potential scenarios, what's the best first step for them to reach out?
Obviously the email is running across the bottom there. I mean, we all love using email, so just email me. That we'll return your email within 24 hours, if not sooner. That's our standard here. We are happy to work for people. We have tons of resources available to dealers. Just great people behind me, supporting me. Obviously, phone. I mean, my number's not here, but 205-908-8792. I'm available 24/7. If I'm awake, I'll answer. If I don't, I'll get back to you within 24 hours. And, we love to serve people. That's what we're here to do. We're here to serve first. And we are ready to do that. So reach out anytime.
And if you haven't noticed, Sarah, not only is Paul very active on social media like LinkedIn, but I see the videos now. He's becoming the face, okay, of this. So, Paul, keep it going, keep it up because people see that and they see you. And I know that when they have questions, we want them to come to Paul Elliott because you know this space better than anybody. And we have great respect for what you do there at the Insurance Office of America, Paul Elliott.
Well, thank you for the very kind words, Ted. And if I can just get half as good or do half as well as Sarah does with her videos, I'm going to be great. I
We
mean,
can
she
read.
is just crushing it. So
Yeah.
I've maybe I got to get a new camera or something. Maybe that's something for us to talk about offline, Sarah. But you do a fantastic job. Y'all do a fantastic job again. Great. So happy to be part of this community. And you know, I love working for uh, all of the people that are viewing today.
Paul Elliott, everybody, highly recommended by the Fixed Ops Roundtable to our community. Reach out if you have questions to Paul directly. I know he'll answer them. He's quick to do that, and he's here to be that trusted voice that that you heard just here during the segment. So, Paul, congratulations, and keep up the great work, Paul Elliott at IOA USA.
Thank you, Ted. Thank you, Sarah.
Paul Elliott, everybody, here with us today at the Fixed Ops Roundtable.